All right, everyone, and welcome back. Like always, we wait for Asia to finish. So we need to understand where price is coming from, and then where pretty much could come into after Asia finishes. Now, Asia is our guide as intraday traders, so we need Asia to finish. It will help us pretty much identify the major liquidity areas because Asia session is a huge liquidity pool. So liquidity above and below. All right, and we just use this as confluence and add it with the other things that we use, or just make it very, very high probable. In other words, it'll give us high probable setups. So we need to understand where we're coming from. So let's go to the 1 hour. So we just ran this high. So we just took out buy stops. So what's next? After this, it takes out buy stops. Came into a mitigated wick. So we untested POI, gonna give us a reaction. After we take out buy stops, it's gonna retrace back in. Why is that? It's retracing back in because their stop loss is here. It's gonna convince people now that okay, right? We broke structure, so this wasn't the valid BOS. So a lot of people were looking for long shit. Let's say for example, you are a retail trader, right? You have a break of this high here, this major structure point. Okay, this is now your area, for example, to go long, and then price doesn't do that. Price just breaks through. What's going to cross through your head now? Okay, if price broke structure now, then you're anticipating shorts, right? Fibonacci from A to B, pull back, short. All right. But we need to understand that there's a reason why price took this high out, paused right here, and it didn't take out this high. Right. And that's very suspicious in some way, right? I mean, why didn't it just take it out? If that's the external range target, why didn't it just push through it? Why did it stop here? Reverse. What do you think the market is doing? It's inducing more sellers into the market. People, I think this is BOS short. Now, I am in favor of the shorts, right? Now we're intraday traders, so we're looking for a quick in and out. We're not looking to hold and swing. Now, if you're gonna swing, then for you should be looking for longs overall to take a swing point. But you don't want to swing in the area, in other words, in a premium. If you're looking for a swing trade, you want to take that in the discount area down here, not up here. And that's just very low probable. So intraday traders, you want to get in and want to get out, right? So I'm in favor of going short, taking this low out. So price broke structure, which is also around liquidity. So we took out sell stops, came into a unmitigated QM, because the reaction failed, so it got taken. Now price, because of this low, right, the institutions had a reason to push lower, which came into this area here. Let's go to the 1 hour, which is a unmitigated wick. We tapped into the open, now at 50%. All right. So my current range is this one from here to here. Price broke structure, ready retracement, broke structure once again. I want this to get taken. So broke, retrace, BOS, that got taken, but failed. And then came into the POI again that price was currently at. So that was a strong low from this current overall range. So we have this. This low didn't do nothing, so we're not gonna count it. It's currently this, but that's it. It's high, of course. The price broke. Trace, broke structure again. Took a liquidity. This didn't do nothing, so we're still in this current leg. So we're still bearish, right, in this leg. Now this is gonna give price a reason to go up higher, take price out, and then we're getting that nice reaction to take the Asia lows out that haven't been taken. But then if this strong low breaks, then yeah, we're definitely gonna drop. But like I mentioned, every strong low should be protected until the cycle is complete. That's what we should expect, right? So this should not break. If this doesn't break, then this low or this high becomes a failure swing, which gives a reason to go up higher to target this. Delete all this. Let's do this. All right. So is that making sense so far? We had a high, so a break, another one, and another one. Okay, that's T1. All right, this leg or this lower here didn't do anything. It's nothing. See that? It's nothing. So that's still the high. That's still the low. So it didn't do anything. So that's not a valid structure point for us. So that's still the push down. And then we move to the upside. All right. So one dot get taken. Strong high right there. Take out liquidity. POS. Frankfurt open. Okay, well, we already saw the move, so I'm not gonna count it. But yeah, I think when it does that. There we go. So we're in POI. We're in the POI now. So our current range is from here to here. This is not a target. So these are weak. They're all weak, and we all should know that by now. All right. They're all weak for now. Price going up, they're strong lows, but once it fulfills its overall move, these now become weak. They just become obstacles, in other words, pullback areas, but they're gonna get taken. So you don't expect these to do this. Again, that's if you have the right range and so on, right? All right, so I'm just jump onto the 5. Okay, took liquidity. Can we get a QM? All right. No liquidity. Breaking structure. This is London open. 3 candle formation. That's the high. I'm taking a short there. Taking a short there. Yep. There's liquidity build up. The liquidity being built up. Trend liquidity. Untested strong high. Yep. Taking it here. Before we go to the higher time frame and it shows the move, just know that I think this is a wick in 15-minute. We'll check it after the move happens because I don't want to see it. But that'll be my POI liquidity just above it. That's the closest to liquidity. Right there. Let's mark up the QM. So we have the major structure break. Liquidity. BOS. Oh, this is a minor BOS. I have the major BOS. Liquidity, of course, right here. There you have the break. All right. This liquidity. All this liquidity, which is also the BOS of this current range. All right. So I'm into my first short here. 7 pips. It's a breaker on small time frame, so I'm gonna take it right here. All right. Notice there's a breaker on maybe the second time frame. So I'm gonna take it here. Let's go to the 5. This looks like a textbook setup, so it should go. Everything looks nice. All right. Put it here. 13R, not bad. Yeah. Now look, this does, does throw people off. A little like a structure. Remember, a high and a low must have a purpose. They must do something. This is not structure. Okay, so don't let this confuse you. So price bar structure, retrace, right here. So broke, retrace, BRs again. That's another T1 inside. If you go to the 15-minute, you see it like this. And then we had BOS, retrace, BOS again. It's another T1. So they happen over and over again. So that means, okay, that means when price was currently, so say that this didn't happen, right? When price came into here, you would have probably taken your first long here, right? And that's fine. But this long right here that you took, the question is now, is this leg going to break that high? If it's a true leg and the real leg, it should break, right? If it doesn't, that's where it became a failure swing. That's where the failure swing comes in play. That's why it's very important to know your failure swings. Because now what happened? It took you out. See that? So keep everything in the back of your head. All right. So I hope this makes sense. Yeah. So yeah, that's our target here. External liquidity, 13R. With BOS by a pip. By a pip. This is the block. I'll take liquidity. Doesn't type PY. So we can take a short here, but we gotta exit here because that's its smaller range inside of this other range. So we can enter here, but we're gonna exit here. It's a 3R. I mean, it's not really worth it for me, but let's take it here. See what happens. All right, we had, okay, let's see. Let's move this. Okay, this is a failure swing. And we just broke a high, seconds high. So that's a failure swing. That high is gonna get taken. So I'm gonna exit this out. Let's say we exit at 1-1. That's horrible, right? 1-1. So that is the exit. This now becomes liquidity. So we're gonna short above this. This is the block. We're gonna short just above this around here, 50%. Look at that. Look at that. It's important. It's important to keep that in mind because you have to see our price being delivered. All right, that came in very impulsive. So in the real market, in the real life scenario, if I'm already in this trade, I would not enter. There's a high chance I probably got taken out by spread, right? So if I did get taken out by spread, what would I do? I would take another short in here because if spread took me out, then I can enter here again. But that's if it gives me something. But we're already on the 5-minute time frame. If I plan on entering short here again, it's going to be on a seconds time frame. All right, so that's what happens. But let's say for the example of this back testing that we short here. Because this strong high shouldn't break, and I'm very confident in my strategy. So shouldn't break. We're gonna hold. Don't let this candle scare you. I've seen it a lot of times. But yeah. If you were trying to fund that account, FTMO or MyForex fund, you probably will get taken out. But it happens. There's nothing you can do about it. Unless you have a zero spread broker or whatnot. But this should drop, create equal lows, giving it a reason to go lower. Okay, so we made a pullback. Looks like I probably will. Yeah, I would. Okay, so I would be able to get my second entry here. I would. Right there. I would show right there. Nice. Well, we already know where I would take that short. And there's a target. All right. So let me recap that short. So I probably just blew your mind right now, right? So let me recap it. So if I took a short right here, spreads take me out. If they take me out, which most likely they would, if you have a funded account, it'll take you out. The only way I would enter here is if I'm already on a 5-minute, 1-minute POI, then I drop down to the 1-minute/seconds structure and look for entry there for T1 and T2. That's the only way. I'm not gonna enter down here of fear of missing out. Don't do that. Stick to your rules, right? Remember, treat every time frame the same way. So when I went to the 1 minute, where I go into the seconds, I already saw it, but if it went to the seconds, you'll be able to see it clear. But I'm sure you see it also. It's quite obvious. Right? So we have the BOS right there. Once that structure broke, trigger information, that's more than enough to let you know that's our range. To the upside, take the high out, take a liquidity. Canada, take a liquidity. Looking for a short here. And that would have been my entry. All right. Perfect. So that would have been a 1-6. That would have been my reentry, my personal reentry. I actually would take that. I would take that and I would have taken that. But for the example of this, let's put them back how they were. What was this? So 1-4, which I would not take personally. And then we entered again somewhere here, I believe. which is a 1 to 3, which I personally wouldn't take. And even, right, and even if you're already in this trade and it didn't take you out, you still have all right to take it here because the market's fractal, so there's no limit. Which would have given like a 1 to 6, and that would have been a nice trade, and I would have been done for the day right there. But did that make sense, right? It should have made sense on how we got those entries. So now we're targeting this extra in the range. Also, we unswept Asia low. Right, that's the range cycle, strong low. I really don't want this strong low to break because it wouldn't make no sense for it to break if we need to take out this high. But regardless, I'm on the shorts right now, so doesn't mean focus. Trade what you see. Can we get a re-entry? Let's see. Took out the high. It's a breaker, right? Let me see. That is a breaker. So I'll take another short right here. I'll take another short right here. Took out the high. Took out buy stops. Something around 3-ish. Took out buy stops right here. See what happens. Beautiful. 13, 13, and 16 if this hits TP. I am aware of this though. I'm be aware of this. Price will for sure give us something. So I am aware of that. And aware of this, right? They're just obstacles, right? Just be aware of them. Melted like butter because these become weak now. However, even another week, still be aware, right? Don't ignore. Do not ignore obstacles. Do not ignore these areas because these areas will give you pullbacks, they'll give you reactions. But just keep them in mind, right? However, follow the overall directional bias or the flow and you'll be okay. But just do not ignore them. I don't think we're gonna get any more retracements. Nope. Nope. No more. Beautiful. Clean trade. It's nice. So took out this low. Well, now I'm curious to see if this goes because that never got taken. You see that? Never got taken, so it's still valid. So now I'm curious to see if this goes. Let me play it out. I'm just curious. Yeah, I did. Awesome. Range cycle complete. Wrong color on this. Range cycle complete. So we took the shorts, and of course you could take the longs, but that wasn't part of my plan today. Today I was looking for shorts. I was on the side of shorts more than on the side of going longs. All right. It just made more sense. It was a textbook setup. It was just quite obvious. I could not ignore it and just say I only want to go long. Like, don't marry it. Understand both sides. All right. But I hope that this makes sense, guys. Remember, a structure point must do something, it must have a purpose, right? It needs to do something. Okay. This low, if this was the real low from this move, why did it not make a higher high? Okay, it failed swing, got taken, still in the same strong low, never broke, same POI, and went. Now, why does price tap the same POI multiple times? Because a order block is simply a price level, right? Price level, key level, however you want to call it. It's just an area, or not area, but pretty much just a price level that price can bounce from it multiple times. So it has all right to do that. If you saw this as structured, if you saw this as a structure point break, let's say, then you would have potentially taken a short here. And what is this? This is the SMT trap, smart money trap. All right, that's the trap. That's the trap of the range. So don't fall for that. But let's say that you saw the trap and you knew that because of T1 and T2, then you will actually go short here and you would target this, which is what I did. So either way that you would have seen this as, structure point or not, the short would have still played out for you. But still, you need to be aware that this is not a real structure point because it didn't do anything. Okay. Yeah. See what else I got to cover here or to explain. Come to a breaker. High low, structure, came to the PI, took out the low, reacted from here. It's the high still, that's the low. All right. Nice. So if you saw it as a liquidity BOS, so you saw this as a BOS, all right, bigger structure, then you anticipate this anyways. So like I said, whether you saw this way or the other way, this right here, this POI would have worked out for you regardless, right? But it's because it's lining up with the higher time frame. So because we got the higher time frame lined up with this, that's the reason we got that nice push to the downside. Yeah, more of a complex example, but it's important to understand these because the market doesn't give textbook setups all the time. So be aware. But awesome. That's it for now, guys. On to the next one.